So, in today's episode, we are going to cover how to cover the gap on an assumable loan. In other words, how to come up with the difference from what the seller owes to what the seller is selling the property for if you're looking to take an assumable loan out. To help us with that, we have Raunaq Singh with Rome, and they have a product that allows you to cover the gap from what the seller owes to what the property is worth so that you can take over their assumable loan with a very, very low down payment. Welcome to the show, Raunaq. How are you?
I'm great. Thank you so much for having me, Jose. I really appreciate it and excited to chat more about what we're doing at Rome.
I am super excited about this topic. So, for our viewers, let's just start off with the basics. For those viewers that don't know what an assumable loan is, what is an assumable loan is, and then I think the episode of the podcast is just that big problem coming up with the difference from what they owe to what they're selling it for, and how does Rome help with that?
Yeah, well, great. I'm excited to start with, let me give you a little bit of backstory on myself and who I am and why we started Rome. So my background is started my career in residential real estate 7, 8 years ago at a company called Open Door that you might have heard of, where we
Oh
help
yeah.
people buy and sell homes. I was actually Open Door's first loan officer, Jose. So I really got a great understanding, when I did that around both the emotional challenges that people have when they're going through home financing. It is often the most stressful and difficult experience that anyone
Mhm.
can go through. And functionally, I thought it was pretty interesting that we have a unique opportunity to help people understand how their personal P&Ls line up. So I fell in love with mortgages, and then fast forward 7, 8 years later, uh, we're seeing that rates went from 2% to north of 7.5%. And that process, as you very well know, what happened is that 75 million Americans got priced out from being able to purchase a home, and sellers decided, well, heck, I wouldn't buy this home at 3,500 a month. I don't know who would, so I'm not going to sell. And as a result, there's less inventory, there's fewer buyers who are able to afford to purchase a home. So the
Mhm.
entire market grinds to a halt, which impacts agents who can no longer find a way to pull transactions together, many of whom you and I probably both know are now leaving the business. And so for
Mhm.
agents, we're helping them understand how to pull transactions together and differentiate themselves with a tool that they otherwise never had access to. And it's a tool that's purpose built for times like today. I'm sure you've
Yeah.
heard this refrain before, but history doesn't repeat, but if you listen closely, it does rhyme. The last
Mhm.
time this was popular was 1981, 1982, as rates went to, 15, 18%. And now we have a unique opportunity to give agents a tool that will help them, bring buyers and sellers off the sidelines. For sellers, they're going to understand how they're going to meet their sales price. And we find that listing agents, when they come to a seller and they tell them, hey, you've got an assumable loan, I'm going to be the agent to get you sold, they convert that seller 9 out of 10 times. And if you work with us, we'll help you get collateral and a slick listing presentation that helps that seller understand why they should pick you instead of their cousin, their mother, their brother, everyone else who's licensed, right? So that's how we help listing agents. And for buyers agents, we're giving them free leads because we generate hundreds of thousands of interested buyers who want to be able to work with an agent that's knowledgeable about assumptions. And so that's a little bit of, what's in it for each party with Rome. Does that make sense?
It 100% makes sense. It's just for our viewers. What he's basically saying is that FHA loans and VA loans, there are certain loans that are assumable, which
Yep.
means you can take over the seller's current interest rate and you can take over their payment. And
Yeah.
then the only issue that a lot of these have is like, let's say the seller owes 500 and they're selling it for 800. That means normally the buyer would have to come in with a $300,000 gap difference. And
Yep.
that's where most of the issues are coming through because then most people don't have a $300,000 down payment. So, how does Rome help with that?
Yeah. So Rome uniquely helps to make sure that you can get what is called a second mortgage. So you can close that equity gap. So let's say in your example, the seller wants 800K, but the remaining mortgage balance is 500K. The buyer can put down, say, 100K, get a second mortgage for 200K, and still get the home for likely what is, 4.5% or so. So over the next, call it 28 years, that buyer in your scenario would save more than $200,000, $300,000 over the life of that loan. It's shocking, but if you think about it, the early years of the mortgage as well are often paid towards interest. So when you're coming into it as a buyer, you're getting the good stuff, which is the equity, right? You're swapping right into the seat of paying off that equity. And additionally, you don't think about it this way, but if you save 800, 900, $1,000 a month times 12 times 27, the savings are enormous, right? People significantly underestimate how much you can save over time. And so um, Really, what we help the buyer do in that scenario, as you highlighted, is we get them second mortgage support. And then we work with the second mortgage lender and the first mortgage lender to ensure that transaction closes in 45 days. The reason why this is important is because if it takes 6 months, 9 months to close, as you'll read online, that seller will not accept that offer, right? They're just going to decide that they'd rather not list, or they'll take a discount on their home sale and sell to somebody else for 80 cents on the dollar, even if you were willing to come up to full list price. And so by closing in 45 days, we give that seller certainty that they can pick your assumable offer. And if we don't close in 45 days, Jose, we will pay that seller's mortgage until we do. And so that seller knows we will put our money where our mouth is to ensure our clients and our agents do the best in the marketplace that they can.
So in that situation, like what's in it for Rome? Like let's say that you do have to
Yeah.
cover like an assumable loan, and different servicers obviously have different rates of speed as well too. Like there are certain servicers that are slower than other servicers. What's in it for Rome in that situation, or how does Rome make money off this?
Yeah, so we have deep relationships with all of the servicers, and so we understand all of their individual overlays, their frameworks. We know who needs what to be able to process a file, and we have deep relationships with all of them. So we can ensure that our clients get their voices heard and our agents look good to their clients, right? We want to make sure both people are happy in that transaction. Now, what's in it for us is simply put, we charge the buyer 1% of the sales price. Very transparent pricing. There's a lot of opacity in this market, but we are very clean and consistent.
Mhm.
We charge 1%. So meaning if you purchase a $400,000 home, we would charge $4,000 in the form of closing costs. But again, think about the savings over time. You're going to get $300,000, $400,000 of savings. The typical buyer who buys a 400K home saves 300K with Rome. Now, additionally, what you'll find is that the origination cost to be able to do the assumption is lower than it would be for a standard purchase. Why? Because in a standard purchase, you pay the mortgage broker 2% of the loan amount. In a assumption, you pay the government $900 and you pay us 1%. But additionally, there's a lot of removal of the cost. So you don't have an appraisal, right? Because the loan was all re-originated, it doesn't need to be reappraised. Additionally, you often don't have to pay for lender's title insurance because they already ran the lien search when the prior loan was originated. So there's benefits additionally on the closing cost basis, it's cheaper, and there's enormous benefits on the monthly savings.
In other words, it's a win-win because, and that's what a lot of people don't understand, that whenever they take over an assumable loan, they're not generally getting a new loan. They're basically
No,
taking over an existing loan, which means that
yeah.
the costs are higher. The other thing
Let
that I
me ask you
wanted to,
this,
uh-huh.
Jose. If you were to think about, the market we're targeting is all the 20 and 21 loans that were FHA and VA. Do you want to guess how many of those loans are out there? Like, what's the dollar size of all those loans?
I would imagine it's so huge because that's when interest rates were the lowest and
Mhm.
everybody was refinancing at that time, basically. Or there was a lot of people refinancing or getting new loans at that time. I don't know what percentage of the marketplace, but if I had to take a guess, I'd probably say like maybe like 60, 70%, 60% of the market, I'd probably
Yeah,
say.
so it's actually about a third of all the 2020 and 2021 loans were government backed, so they're fully assumable, which is a total dollar volume of $1.5 trillion dollars.
It's
It's
huge.
crazy. There's $1.5 trillion dollars of mortgages at 3% that are fully transferable from the seller to the buyer. But we find that 95% of agents do not know about it. And so we're here to let agents know that they can work with us to help their seller get their best sales price need
Mhm.
because we're going to be able to generate more demand for their home. And for buyers, we help them ensure that they can find the most affordable home in their neighborhood to purchase and do so in 45 days.
Yeah. And I think I wanted to go deeper on a point that you made about the amortization table. What he's saying is that whenever you look at, at how much goes into principal and how much goes into interest, in the first couple years, it's not as much. But whenever you take over a loan, you're also receiving the benefits of them going deeper in the amortization table, which means more money is going into the principal, which means you're paying down the loan a lot faster. What I wanted to ask you is, how much of a down payment do they have to put? Let's say in that example where they have a $300,000 gap, what's the minimum down payment that a buyer would have to put? Do they have to put 100,000? Do they have to put 15%? What's that amount?
So you would only have to put 5% down. So, on $1 million home, it'd be $50,000, right? And the reason for this is that the rest of the money would be financed by the second mortgage. Now, we often do encourage buyers, though, that the more you can bring to the closing table, the more likely it will be that you get the lowest blended rate, right? Simply put, the more you put into the first mortgage, the less you have a need for a second mortgage. So we encourage people to put as much money as they can. But again, we find that a lot of buyers, they often take out a second mortgage with Spring EQ, who's our preferred partner, because they want a little bit of breathing room, right? They don't want to put every single dollar they have in trying to close that transaction. That's so stressful. So if you need some help, take out a second mortgage for 25, 30K and know that our second mortgage, it comes with no prepayment penalty. So if you get the 30K later on this year, great, pay it off. You no longer need that second mortgage, but at least you didn't feel so stressed when going through that process that it made it difficult for you to live your life, right? So, and another thing to note is that our relationship with second mortgage partners, we do not make any fees. The fees that would have been passed to us as the person who helps that customer find the partner, we actually tell the lender to rebate into the price so the consumer gets the lowest possible cost. And so that's continuously how our business works. We are not interested in, making money on all these side opportunities. We are here to reduce the complexity of coordinating the transaction such that it becomes significantly more accessible to be able to assume a low rate mortgage.
Got it. And then I had heard that whenever you're taking over a loan, that the lender that you're taking over the loan, they generally don't like to see second mortgages. Is that true? Is that not true? How does that work?
So, for instance, on all FHA transactions, secondary financing is permissible by law. And for that matter, all FHA and VA loans are assumable by law. So I hear this often that maybe lenders will stop it or maybe lenders don't want you to be able to assume a mortgage. We actually find the opposite. You have to think about, first, they're required to be able to do this. FHA and VA mortgages are fully assumable by law. It's part of the contract. Additionally, often what people don't know is that VA mortgages are assumed by anyone. You don't have to be a veteran to be able to do a VA assumption. And so we help people access those assumptions. And additionally, what we're often doing is educating sellers on the opportunity that they have to get the best sales price for their home and almost create a bidding war for their home because they have such a valuable asset, which is this 2% mortgage. That's going to be a generational gift.
But the lender, the first lender, the FHA or VA, they're okay with you taking a second trust deed on a property. It all gets done at the same time.
Yeah,
It's all disclosed basically.
correct.
Perfect. Okay. What does a second mortgage look like on a transaction like this? Meaning like is it amortized over 10 is it amortized over 10 years, 20 years, 30 years? How long of a loan is it?
Entirely up to the consumer. They offer 10 years, 20 years, or 30 years, no prepayment. It's entirely your choice, what you would prefer.
Got it. And then so what does Rome do? Is Rome a lending company? Is Rome a transaction coordination company where they help process these types of transactions? What is actually Rome?
I think of Rome as the home affordability platform of the future. And the reason for that is that, there's going to be many different tools and products that we can roll out across all rate environments that will allow Rome to continue to be the most affordable choice. But whether today or in 10 years, I would want everyone to think of Rome as the most affordable way to purchase a home. We're starting with assumable mortgages. And then we found, as we looked into assumable mortgages as the right solution to be able to create the most affordable way to purchase, that there were effectively two issues. One is that you couldn't find those homes anywhere. So we created the first data feed for people to be able to find all the assumable homes. If you go to Zillow and you're trying to find an assumable mortgage, as I'm sure you've run into, you use the keyword search function for an assumable mortgage and you don't really see any results in Houston. But if you come over to withroam.com and search in Houston, you'll find 1,000 homes that are readily available to be able to be assumed. And so we built the ability for you to find the homes. And then separately, we built the ability to coordinate the transaction on these homes, which includes helping the buyer get the second mortgage support, ensuring the seller, if their transaction takes longer than 45 days to close, that they're paid out. We have a concierge service that actually helps to ensure that agents get the support that they need on a one-on-one basis to ensure that they are aware where the transaction is in the process of being closed. And we have software that works with all the lenders and servicers to coordinate and, give more credence to the transaction that it will close quickly and with certainty.
If Rome has to come up with the difference, let's say it takes 6 months to close it, if they have to come up with that difference, how does that work? Because that could be more than the 1% that they're making on the processing fee.
That's okay. We would pay it. If it takes 6 months to close and we gave you a 45-day closing guarantee, we will pay it.
Got it. And then how does Rome make it so that you have the all of the available? Is it all of the available assumable loans that are on the market? Is it some? Does the agent, do I as an agent have to go put it on there manually, or how does that process
No.
work?
So, one thing I should know, by the way, is that our typical closing timeline is 45 days. So we rarely, ever exceed that. Tradition. We close an assumption in 45 days,
Hmm.
just in the same timeline that it would be for a standard purchase loan. Now,
Hmm.
it's a good question on how does the product actually work. So we are licensed as a real estate brokerage. We get access to the MLS feeds. So at that point, we know all of the homes that are listed. And then we build, with machine learning, we have the ability to identify every underlying county recorder deed for those homes and identify what the underlying loan type is. So we merge those two together, and then we identify the most attractive homes that are eligible for the assumption by curating from a rate and down payment perspective, which homes consumers would be most interested in. So that's a function of what you seed. The listing agents do not need to know anything or do anything. They just need to be able to, list their home. And if they list their home, oftentimes the first time that listing agents hear about Rome is when a buyer is ready to make an offer. And they say, I found your home on Rome. I'd love to be able to offer and assume the mortgage that your seller has. And the listing agent goes, what's Rome? And so at that point, we help them understand how their home has an assumable mortgage included, how we're going to help to ensure their seller is released from any liability, how their equity will be cashed out, and how they'll close in 45 days.
Unbelievable. This is great. Yeah, it's phenomenal. It's funny, before you explained how you found the assumable loans, I kind of had a feeling that that's what it was, that you guys had access to the public records and then that would curate the information. Anything else that you think we should know about Rome and how it's going to help consumers find the most affordable way to purchase a property?
The way I would think about it is that, in today's environment, you're seeing sellers decide they're not going to list, agents decide they're going to leave the business, and buyers decide they're going to sit on the sidelines until rates drop or home prices drop, or, everybody's kind of just hoping. And so what I mean to say is that there is an immediate solution that we can offer consumers and agents that will revitalize the real estate business. And that's why we call the company Rome. So people knew that they could have economic mobility regardless of any rate environment to be able to purchase a home in the most affordable way, and as a seller, to be able to generate the most demand for their home in the most certain way. So, that's what we're excited about. And for agents, we're excited to help you put deals together. Our top partner agents, I should mention, by the way, make $2 to $3 million a year. Reason for that being that they specialize in assumptions, and there are hundreds of thousands of customers that come to us and want an agent that specializes in assumptions, and that's what we, help to deliver. So if you're an agent and want to get in touch, email us agents@withrome.com, and we're going to be excited to get you set up with marketing material for your listing. We can get you listing presentations, and we can even share information with you about other properties in your core zips that would be eligible for the assumption, but those sellers don't know it. So you'll be the agent that brings that information to them on the listing side.
And just so our agents know, like, this is something that I have used to win listing presentations in the past as well too, where I have gone on listing presentations. Other agents have told them that they have no equity or very little equity, and we're able to win that listing presentation because we make them aware that we have that. If somebody wanted to visit your website, what's the best way to do that?
It's withrome.com, WITHROAM.com. And if anybody has any feedback or if there's agents listening, you can also email me directly. I respond to every single email that I get. My email is RAUNAQ@withrome.com.
Got it. Okay. Well, I want to say thank you for taking the time to be on the show today. We had Raunaq Singh. He is the CEO and founder of Rome. We talked about how to cover the gap of an assumable loan, how to come up with the difference from an assumable loan, and how to come up with the difference from what the seller owes to what they're selling the property for on an assumable loan. Thank you so much, and I appreciate your time.